Good evening, traders and investors. Will back here with another one, coming to with a Thursday market recap. Hopefully you guys had a very good day in the markets today. And in today's action, the S&P up a little bit, the Qs down a little bit, but we did have some slight improvements in terms of some momentum indicators and some breadth indicators as well. Fear and greed right now has clipped into the higher end of the fear range after being stuck in extreme fear for a very long time, a reading of 39, which is still somewhat fearful, but you have some momentum indicators curling up a little bit higher. We are creating a bit more distance from our longer-term moving averages. The stock price strength is improving ever so slightly. The stock price breadth is also improving ever so slightly from the bottoms that we saw late November. And if you take a look here at the percentage of stocks above their EMAs, the percentage of stocks above their 20-day EMAs at a very healthy 70%. So momentum is being had on the shorter-term timeframes. In terms of the percentage of stocks above your 50-day EMAs, more slight improvements as well. However, one thing that is not showing signs of improvement is the jobs market. Today, we got a very big piece of news early this morning, which was going to be the other biggest catalyst for the week. I'll remind you, yesterday was all about the ADP employment change, which did rock the markets very early in the trading session yesterday. And today was kind of no different. We got the Challenger job cuts report. And you might remember at this very same moment last month, we had a very brutal red day in the S&P and the Qs. Today, we were able to absorb the negative news a little bit better than last month, of course, but still sliding. 71,000 jobs were posted as a loss for the month of November per the Challenger jobs report, which led to a headline like this. Layoff announcements top 1.1 million total jobs this year, the most since the 2020 pandemic. So we'll be covering this news article in just a few short moments. Additional pieces of news today. This one right here. Meta stock climbing 3% on a report. They are planning to cut metaverse expenses. Now, this has been a big point of contention for Meta over the past few years. They spend literally $4.5 billion on the metaverse every single quarter without much signs of return towards that. And as a result, Mark Zuckerberg may be starting to pivot his focus from the good old metaverse towards AI. So we'll take a look at that as well when we cover Meta stock later on in the video. And lastly, something that curiously happened in the after hours today, SOFI coming out with another $1.5 billion stock offering, a bit of dilution right there. You may remember they did the exact same thing in July, and they gave the exact same reason this time as they did back in July, basically to expand different arms of the business. So the money will be used for very good purposes, but still hurting the stock in the after hours. That one was down 6.5%. We will cover this piece of news when we go over SOFI later on in the video. We cover our stock specific segments. So that being said, guys, in today's video, we got a bunch of things to cover. No earnings today, although we did have a few earnings results. I'll be covering them in the Saturday video. No video tomorrow. Unfortunately, I will be busy with some friends tomorrow evening, so no video tomorrow, but I will film it on the Saturday session. Then the Saturday session, we'll be probably going over Rubrik, possibly Sentinel-1, and maybe one or two others that we've kind of missed over the course of this week. UiPath, which is a new addition from me that I started earlier on this week. Didn't tell you guys on the YouTube channel, but we've been crushing it in the Discord with some call options and some longer term shares. That was up huge yesterday after their earnings. So we'll be probably taking a quick look here on the Saturday session for all of those. Don't worry, I give you guys most of the plays, but some plays are for the Discord members. But hopefully you guys might be able to join us soon in the Discord if you are tired of trading in the markets alone. After we are done our earnings presentation, right? We will be, or not the earnings presentation, the jobs presentation. We'll be jumping into our technical analysis portion of the video. SPY, Qs, and all of our major sectors. Where do they stand? Where's the rotation? And where could we possibly place some bets leading into the month of December? Later on, we'll be covering our biggest gainers and losers of the day. Or sorry, big tech first. My mistake, guys. I'm all over the place with the chronology of this, this video. So moving on. We will be covering our big tech names and drive of these big tech names, which are very decent opportunities in the market right now for either swing trade opportunities or longer term portfolio buys, because we know several names here have been really lagging behind and have been hurt by recent market performance, but others continue to be quite strong. So which ones are my favorite ones leading into the month of December and 2026? And at the very end of the video, I'll be trying to get through the first part of the video very quickly so that I can cover what we're currently seeing right now in some of the biggest gainers and losers. A lot of the momentum and high beta names for the past 2 days have done something. They're starting to finally turn around the short-term timeframes, setting some daily uptrends after weeks and weeks and weeks of being down 20, 30, 40+%. So there are possibly some opportunities here in some momentum segments of the market, whether you guys were looking to DCA into some positions or derive some swing trades. So we will talk a lot about that momentum segment of the market towards the end of the video. And that's going to be it for today. So let's jump right into it, shall we? The SPY up 0.07, the Q's down 0.09. That being said, take a look at the heat map right here, guys. The heat map was not all that bad today, but still a bit of a mixed game today. The big tech names were very mixed. Apple, Amazon, and Google sadly down, but NVIDIA finally showing up to play a little bit of ball here. Microsoft up, Tesla up, Meta up after their own pieces of news respectively. And moving on to the financial segment, financials still kind of mixed. The credit card companies sadly down again. No news whatsoever, just unfortunately down again. The banks doing well. The healthcare sector, unfortunately, with a bit of a pullback. We know that they ran very hot throughout the month of November. And since the start of this month, well, they've been just consolidating in a very healthy pullback. And the bottom half of the market was additionally very mixed because for some reason, the 10 and 20-year yields keep creeping higher. Despite the fact that we will be getting a rate cut next week, we know there's a bunch of bond vigilantes at play right there, push and pull between, whether the rates are restrictive enough or not. So the yields have been all over the place and as a result have been affecting some interest rate sensitive sectors, which is why the bottom half of the market has been a little bit mixed over the past few days. Moving on to your one-day relative, you can see that even better, very mixed market kind of, midway through here. Industrials, communication services, energy, financials, and technology all moving higher, but we are missing certain segments here. Utilities, real estate, cyclicals, healthcare, and defensives. Some of those affected more by the direction of your longer term yields, the 10 and 20, than others. Of course, on your 1 week, we still stand at a pretty healthy level in the market right now, right? Most of the market pushing higher, but still some losses in utilities, healthcare, and real estate overall. So not too bad. We already went over the fact that we're gaining some strength here on the Fear and Greed Index, looking just at some momentum cues and clues, and also some of our breadth indicators as our percentage of stocks above their respective moving averages are not looking too bad at all. But let us talk about that jobs report really quickly because it's a very big headline, right? This 1.1 million jobs over the course of this entire year, the most since the 2020 pandemic. Now, you might remember a few months ago when a lot of these companies were announcing massive layoffs, companies like UPS, companies like Target, companies like Amazon, companies like several of the big tech names, Microsoft, Meta, etc. Well, the reasons behind a lot of those layoffs were in three parts. Number one, yes, there is some AI and efficiency gains, which is why Amazon and other big tech corporations are laying off some of those employees. Number two, there are some structural changes in some of the businesses, such as UPS and Intel. UPS just hired too many people in 2022, and now they're leaning down their workforce to cut on costs after they lost, or rather they chose not to take the Amazon contract upon themselves again this year. So that is a structural reason. Another company, for an example, right, is Intel. Intel fired a bunch of people because they're restructuring the company because they haven't been doing too well, right? That's not because of the economy. The third reason, the economy reason, right? Well, those are not the highest amount of job cuts right now. That's what you should be focusing on. Number one, not the AI and efficiency gains, although that's going to be a big talking point over the next few years. I completely agree with you, right? Number two, the structural changes within corporations that were just not efficiently ran over the course of the past year and a half. Well, there's nothing you can do. That's a company's execution problem specifically, right? So you want to be paying attention to 1 and 3. Number one, AI and productivity gains from a lot of the tech companies. And number three, results from either the tariffs or other macro concerns. So let us kind of break it all down. You can see here the Challenger jobs report coming in at 71,000 jobs, sadly being cut throughout the month of November. Now, you may remember here, this was a huge one back during the tariff situation. I don't know why. This is like a mislabel. They just copy pasted the November 2020 ones. This number should actually read at the top for March, 275,000 jobs being lost. And now you can see the damage in October from that Challenger jobs report that led the S&P and the Qs to be down 1.5% and 2% respectively. Well, it's not as bad, right? This is not the worst read of the year, but it does add some pressure to the jobs narrative, which we know has been a bit on thin ice as of recently. And we also know the Fed has said that the balance of risks have shifted from inflation to the jobs market, which was the reason why they started cutting rates earlier this fall in the first place after not having touched them for a very long time, right? So let's break it all down here. Year-to-date job cuts hit a 5-year high as employers have announced over 1.1 million job cuts so far in 2025, up 54% from this time last year and the highest since the pandemic, as we already said. But breaking it down right here, market and economic conditions, along with company restructuring, led the reasons for the job cuts. Tariffs cited for 2,000 job cuts in November and 8,000 year to date. That's not that bad, right? When we're talking about 1.1 million jobs, you would assume if tariffs were the problem, right, for an economic slowdown, well, you would expect to see a lot more job cuts in relation to tariffs, because when the employers cite reasons for the layoffs, right, to the challenger team, well, only 8,000 were a byproduct of those tariffs and pricing pressures on those corporations. Telecommunications and technology had the most jobs cuts in November, the report said, with 15,000 jobs cut in telecom. Verizon reduced more than 13,000 jobs, but we went over that report about a month ago when it happened, right? New CEO, trying to make the company leaner. That was an execution problem with that business. Not necessarily the business needs to cut because of economic worries. No, that business was arguably mismanaged for a very long time, similar to other companies such as Intel. And now new management comes in and they kind of start trimming the fat and focus on cost efficiencies. So there's reasons behind a lot of these job cuts, right? And 12,300 in tech, likely bolstered by Amazon's reduction of thousands of corporate employees. That's a productivity and efficiency gain, right? Retail and nonprofit organizations have reported the highest percentage increase in job cuts so far this year. Retail and nonprofit organizations. Retail, we know, because consumer discretionary spending has been very soft. Consumers are very picky and choosy about where they spend their money. Now, if you look at the data from the banks and from the credit card companies, consumer spending is still somewhat resilient. However, people are just being more picky with what they choose to spend their money on. They're still traveling, they're still spending on experiences, but they've cut down significantly on their purchases of apparel, food away from home, and number 3, electronics, and also home renovations, right? A lot of things also having to do with interest rates being high right now. Retail companies have reported 91, almost 92,000 job cuts, up 139% from a year ago, while nonprofits announced plans to cut 29,000 jobs this year, an increase of 409%. Moving on further, layoffs from Doge earlier this year, the cost-cutting endeavor for the federal government, of course, remains the leading reason for job cuts for the year so far, having been cited in 293,000 planned layoffs overall. So, of course, there's much more than that, but that's the bulk of things, right? The one takeaway from here is that it's not a result of tariffs for the most part. Number 2, a lot of this has to do with consumer discretionary spending patterns having changed over the past year and a half. And we've seen that from declines from companies all the way from either Target to Chipotle to other different brands as well, which have kind of been struggling with pricing power recently. And as a result, are not seeing as much demand from the consumer as they once were, possibly previously in 2020, 2021, when rates were low, stimulus checks were high, etc., before all the big inflation started to kind of come into the economy, right? But that damage is, or largely has been done already. And number 3, obviously, is the efficiency gains and restructuring gains. A lot of the companies, guys, you remember I brought up a list of all the layoffs that we'd had so far? I totaled like 500, 600,000 jobs. So many of those were company-specific execution problems. Talking about UPS, talking about Verizon, talking about Intel's. That's 100,000 jobs right there, right? So many execution problems. Then you have the Amazons of the world, the Microsofts of the world, laying off to AI. Now, those roles may be cut more in a permanent fashion, and those workers will have to be reskilled and retrained. That's going to be a big focus leading into 2026, right? And to be honest with you, it's going to be tough to kind of predict where that labor is going to actually end up. Now, we know that the AI boom is hurting possible white-collar jobs, but it's enabling a lot of blue-collar jobs for the good old infrastructure build-outs, of data centers, energy jobs and construction jobs and just everything, right? Electricians, plumbers, anybody in construction, various aspects of that, right? So it's kind of shifting. There's a bit of a dynamic shift right now. So we'll have to pay close attention to these jobs reports as they come out and try to kind of make sense of them and decipher them as we move into 2026. I think the biggest concern into 2026 is not going to be inflation. It's not going to be tariffs. It is going to be the labor market, because that is the only thing that is currently showing some signs of deterioration right now. So we're going to need to be careful when we are trading surrounding these labor report events. So please keep that in mind. So that's everything for your early introduction. Hopefully you guys enjoyed that breakdown. I'll be bringing up more and more themes pertaining to the jobs market overall. I mean, we're not falling off a cliff, but let's be honest, right? It's weakening slowly but surely in terms of the overall headline numbers, we're not seeing the consumer being laid off millions of jobs at a time, like every single month, like during the pandemic type of thing, right? So far in company earnings in Q3, companies aren't announcing massive layoffs because they fear that the economy is going to somehow crumble, right? That's not what we're getting. We're getting a slow deterioration for many different reasons, from execution problems to repurposing employees, or rather laying off employees on a permanent fashion because of AI. And these are not things that are synonymous with a crumbling economy, right? No, they're very specific elements that we will have to see how they will be addressed into the future. And if the Fed is able to stimulate possibly, right, with their pretty much their rate cuts, and maybe indirectly kind of force these companies to go back on a hiring spree, especially if there's supposed to be all of this growth in the economy as a result of the tax cuts next year, as a result of the continuous AI boom, et cetera, et cetera, et cetera, right? Jobs are lost here in AI, but are created elsewhere. So keep that in mind, guys. It's a very complex topic and a moving target. So we will keep an eye on that as we get more data over the next coming months. Moving on to the technical aspect of the markets, guys. We're going to go through these quickly because, to be honest with you, nothing much has changed, right? Daily downtrend on the SPY, nice engulfing move. The bulls right now are just trying to keep this nice little daily uptrend going. This is not a daily high or low. We never actually lost in the regular trading hours. You never lost the hourly uptrend. It's just sideways consolidation, right? When you want to find a daily high or low, you're going to need to see a loss of the hourly downtrend, or the hourly uptrend rather, and go for a daily high or low. In the event that we pull back tomorrow or into Monday, you guys know the drill. Looking for a daily high or low for possible further trend continuation into the end of the month of December. The reason that we have a bullish leaning bias is, of course, because our momentum indicators are starting to curl back to the upside. The MACD as well, on not only the indexes, but on stocks specifically, are also curling a little bit higher. And we have a lot more market breadth, right? And additionally, we never lost the long-term technicals. Still in a very nice monthly uptrend, still in a weekly uptrend, which the bulls were able to save at the lows of November. As a result, the bias remains bullish. So if we do get a pullback and a support, 674 down to 666, and an increase in the VIX while we do that, I will be looking to sell some put options, writing put options below the market on some of my favorite companies, as I still do have a bullish leaning bias into the end of the year. Moving on to the Qs right now. The Qs, same concept, daily downtrend, nice engulfing move by the bulls right here. If we get a pullback, looking for a bit of a daily higher low. Support stays put, 614 on about 605. Daily higher low for possible further trend continuation, right? We have a bullish leaning bias for all the reasons I just described on the SPY. So this is exactly the same. If we get a bit of a pullback, I will be selling some put options and possibly buying some shares on some of my favorite tech companies. Shares for the long-term portfolio, selling put options for the trading account. Very simple, right? Moving on to financials right now. Financials, nice expansion, but not broad-based. We still have some laggards right here. Visa's lagging, MasterCard's lagging in a big way, right? American Express has actually performed quite well recently. The banks are doing well. They're expanding. JP Morgan back to the highs, Goldman Sachs back to the highs, Morgan Stanley back to the highs, new all-time highs, matter of fact, Bank of America back to the highs. I know I'm going through these quickly, but just so you guys get a sense of where we are, right? Wells Fargo back to the highs. There's a few elements of financials lagging behind still. SPGI, super high quality company. Moody's, super high quality company. And we just went over the two other ones, right? Visa and MasterCard. So if I'm looking for some financial bets, I'm looking no further than those four names, which are all very high quality names within that ETF overall. But financials not looking bad, right? Daily uptrend and cracking through the resistance range, 53.30 down to 52.85. Nice daily uptrend. If we do pull back, looking for a higher low, anything above 52.70. Now, nice support below us. The EMA is below us as well. You wouldn't be surprised if the bulls continue this uptrend right now. Weekly downtrend, nice engulfing move. If they hit the pause and reset the uptrend, that'll be nice. On the monthly time frame, guys, it has been nice this entire time. Monthly uptrend, perfectly backtesting, huge support. And the 12 EMA financials looking poised for another leg of upside into 2026. We'll see what happens with the good old rate possibly cut next week, because it's not guaranteed just yet. The odds are pretty high, but they're not 100%, right? We're still right now at about 87. So we will see what Powell and his team brings to us. Moving on to healthcare right now, more consolidation on healthcare, but we were kind of warning about this, right? Very natural move of consolidation after 4 beautiful months. You're getting a bit of a downswing here into the early portion of December. The daily, I mean, this is a very big retracement size by the bears, right? A very big retracement size, to be specific. That's over 618. So at this point in time, it favors the bears now for a possible daily downtrend. The bulls still have a shot of keeping it going, but with such a big retracement, right? That is when you might roll this one over, and that's when you go for weekly consolidation, possibly coming back down here to the whole 150, down about 145 pocket. Sorry, I got something in my eye. And as a result, you're just going to be looking for the monthly cup and handle back into support. This could be a very nice re-entry trade for healthcare. So keep an eye on it, right? If they offer us the re-entry, I'll gladly take it. If not, I'm perfectly happy because I took call options from here and literally sold them at the top of the move. Well, one portion here for TP number 1, TP number 2 was hit. If they want to reoffer me the entry, I will possibly gladly take it. Moving on to SMH right now. SMH, I mean, not a bad day, but down 0.75%, right? Same context here. Daily downtrend, nice expansion move, engulfing move. Any weakness on this one, you're going to be looking for a higher low. At this point, 343 down to 324 are a very big support range. If you do pull back, decent buying opportunity for some of our favorite names. Now, not all names are built equal. You might remember me saying the last few days and weeks, NVIDIA has been kept low. AMD has been kept low, right? But other companies have pulled back a little bit. But I mean, Micron is still relatively close to its all-time highs, right? LRCX is still relatively close to its all-time highs. Monthly is all the way up here. ASML is still very close to its all-time highs as well. So some names have pulled back more than others. And as a result, I will be focusing on some of the highest quality names in that index that I like very much that are right now low, not focusing on these that are all the way at the highs. No, these are just holds for me currently, right? Moving on to the Russell right now. The Russell, not a bad day, another percent, and challenging the all-time highs again. Looking pretty good. Nice daily uptrend has been set right now. If you get rejected at resistance here, looking for a new daily higher low, anything above 245. Looking for it to continue the uptrend expansion. That is if they don't just blast through the top tomorrow and into Monday as well. But a decent amount of space being created nevertheless. That being said, decent amount of space on the weekly. This is now fully engulfing. They did it. They pulled off the ever so elusive V-shape after losing the weekly uptrend. This is the unlikely scenario, right? It's not very high probabilities of a full V-shape when you lose the weekly. Usually you do it in 2 stages. Now, if they do offer us a re-entry stage down here, I'm not going to say I'm going to bid this one, but I will be looking for additional small cap companies that I've been kind of coming into. I'll show you the trades. Some of them are still early, maybe not as early as we got them in the Discord, but I'll show you some of the small cap names that I'm focusing on Saturday. I promise. I know I haven't talked about them much, but I have been playing small caps. I just haven't been playing the Russell specifically, so I'll show you those possibly in Saturday's video. And on Saturday's video, we'll also do a breakdown here of the minor sectors. I'll kind of jump through them for now. You guys probably know the rotation that we've been talking about so far in terms of, into consumer staples and into consumer discretionary as well. Could be decent risk to reward trades, but we'll talk about it more on Saturday, as we will talk about more the yields on Saturday as well. Moving into gold right now. Gold, not a bad session for gold. Today, it was pretty much flat. And in the after hours right now, consolidation. Gold's done nothing all week, right? Still in a nice daily uptrend. Back testing the 12 EMA right now. So the bulls are in control of the short-term timeframes. The weekly, though, is kind of slowing down a little bit. It's not this anymore, right? Now it actually looks more like gold. Gold is not supposed to move like this, right? It's supposed to move kind of slow and steadily, right? So that being said, not too bad of a move. The bulls are still in control. But if you do have entries from down here, guys, just remember to put your stops at break even, because if that does crack below, you're just going to probably head into some awkward bull flag right here, where like we kind of did all the way back there, right? Where it just consolidates, gets super, super tight. You know what I mean? And then maybe just cools off the monthly timeframes as well as a byproduct of that. Just kind of some consolidation up here. It wouldn't be the craziest thing. I'm still long, but I do have stop losses at my break even in case the result of this push long is not blasting through the highs and we just end up going into a bit of extended consolidation. Moving on into good old Bitcoin and Ethereum's. Bitcoin, not too bad. Still a daily uptrend, right? So we're looking for a new higher low, anything above 84. New higher low on Bitcoin. We are still in support. They're barely holding on to it, but you got to give it to them. They are holding on to it. So as long as this daily uptrend continues, right, we are in a very nice weekly upswing. Now, what I've been saying is that that's a lot of damage done on the weekly, right? For you to almost be certain that this is the actual true monthly low of this downswing, you need a very solid weekly bounce. Give me a 50 to 618 bounce, which is up to 100,000, up to about 103. Get me up there, and I'll be able to confidently say, okay, the bulls have a great opportunity to reset a weekly uptrend and confirm this as the monthly low of this entire monthly phase of consolidation and liquidations and anxiety, right? And then we might just be able to push higher on the monthly and go for the expansion into 2026 as part of the risk on trade. But as of right now, guys, the daily, I mean, it's there. But if we were to lose this into a new daily downtrend, well, you guys know the drill. If you fully engulf this move, guys, it's not going to look good, right? It's just going to look like a weekly lower high and possibly going down into support. So be careful on your entries. It is an entry for a swing trade long here with a stop below there, and then you're targeting these guys all the way up there. Not too bad risk to reward, but just be very cautious. Moving on to Ethereum, same concept as well. Daily uptrend is nice. Bouncing out of support, 32 down about 28 is nice as well, but the weekly is still in a massive downtrend. So if you are trading this one on the daily uptrend breakout, stop loss goes below here, and then you are targeting take profit number 1 and take profit number 2 up to these guys, which is your most recent weekly leg of selling. At least that's where they started it from. If you want to see the full reversal, you got to give me a very nice bounce size, guys, to give me the confidence that I can position for the longer duration trades, which is the monthly expansion trades, right? Whereby, you know, we're positioning possibly on a little bit of a backfill right here, and then you're positioning for the full long with larger size. Now it's a nice swing trade, but you don't have a confirmation of the weekly just yet. So pay attention to those levels on Ethereum. But as of right now, the price action doesn't look too bad at all. Moving on to our big tech names right now. Okay, so for the big tech names, we're going to try to run through these as quickly as possible because I want to get to this biggest gainers and losers of the day list because there are some structural changes that we want to talk about. That being said, stock number 1, Apple. Apple pulling back a little bit, very natural. We were saying that, right? Daily was a bit extended. The weekly is also a little bit extended. So in the event that now is the time for a pullback, well, area number 1 is going to be these guys right about there, yeah? This entire range of price action that can act now as a bit of a back test for support. So we'll see if Apple can kind of hold the price here and continue this daily uptrend. If you take back too much and set up the daily downtrend, it will be perfectly natural, just looking for a bit of weekly consolidation, maybe down to this 12 EMA at the same time as well, and also monthly consolidation too, right? We'll see how long that lasts. If you take, you know, stocks like Microsoft and Netflix as a proxy, right? After 3, 4, 5 months of beautiful rallies, similar to Apple, maybe we have to pull down a little bit before getting those beautiful Q4 earnings, which will come in the month of January. Apple for me up here is a no trade, unfortunately, right? It's just a bit too extended for me. It's very greedy. If you get the pullback, I assume you can go for the stop loss and then into 300 psychological take profit. It's a very greedy trade, especially when you're this extended on the weekly and monthly time frames, but the trade does exist, kind of like gold, you know what I mean? It's a greedy long, but provided that you put a stop loss there, then you can kind of justify the R&R. That being said, am I buying more Apple shares up here for my long term? No, because the valuation is still quite high and the technicals are a little bit extended. So I'm perfectly fine holding the Apple shares that I bought back here. I mean, I've been holding Apple for years and years and years, right? But the last time I added was down here and not since. And I do believe it's not the best risk reward up here overall for that. Moving on to AMD right now. AMD is still doing a whole lot of nothing. This entire week so far, AMD has done absolutely nothing. So daily downtrend was clear as day. Oops, I can't really draw anymore. Daily downtrend, daily uptrend reversal, and now the bulls are trying, but they're struggling with the EMAs, right? They're trying to go for the daily higher lows, try and reverse this. The MACD is desperately trying to cross. We will see if we get that next leg of expansion, right, to the upside. That being said, we're trying to call that this is the AMD bottom. Stop loss very clearly goes here, and expansion targets go up here. It's not a bad risk to reward trade. That's not the right tool. This is the right tool, right? It's not the worst risk to reward trade overall, yeah? It is literally almost a 2-to-1 trade. Not too bad. Adding shares of AMD as well, not the worst proposition too, because at 200 or close to 200, the valuation is very fair, around a 1 peg and around an 8 price to sales. Very fair in relation to the revenue and EPS growth rates that AMD will be having. I bring this up every single video just so you guys understand. If you're in this one, the price action is choppy, but we'll be coming into some of the best years of AMD's recent history in the next 2-3 years, right? So the long-term thesis is definitely still alive. However, if you break down to the downside, right, it's just going to fill a little bit more of this gap and heading into support right down there, 190 down to about 175, which would be a beautiful monthly kind of back test down here, right? The 12 EMAs curling up, you know what I mean? It'll be a very nice monthly back test, possibly for some further larger long opportunities if you're not just going for a short-term swing. Moving into Amazon right now, Amazon down 1.41% off of no news whatsoever. Just normal price action. That being said, we commented on this just the other day. Rejection into resistance, 240 down to about 230. Daily downtrend. The bears are still in control, even though that was a very nice bounce. They're going to have to two-step this, right? Getting a full V shape on this move, guys, through resistance, you're asking a lot from the bulls, yeah? That was a 618 bounce. It gives the bulls a lot of space to do this, exactly what they're trying to do right now. Go for the two-step daily uptrend reversal, which is why I said in this video, or rather in the videos prior in this week, right? If it does give us the higher low, I'll be shopping for some longer-term shares into the 220s, but also I'll be selling some put options down here, writing some puts in my lower 220 range where the 200 EMA is right before support, 216 down to 205, which I do believe will stop the price if we pull down into it. That is also your 12-month EMA. A lot of confluence down here. So many factors at play for Amazon. It doesn't look too bad, but I will be wanting to take advantage of these discounts while they're here because fundamentally, Amazon is looking pretty decent right now. Around 220, you're talking about a 28 forward PE, a 1.4 PEG after phenomenal earnings that we covered October 30th. Moving on to Google right now. Google down about 0.7%, still struggling up here with the all-time highs. The bulls might be a little bit tired, and can you really blame them? After carrying the tech sector on their backs here, better part of the last, 5-6 months, pure acceleration to the upside, but now monthly overbought conditions, weekly overbought conditions, and daily is struggling to push above. It doesn't mean we can't go higher. We can always go higher, but we can also go lower, right? If you kind of lose these lows, sadly, you'll be setting up for a bit of a daily downtrend into a bit of weekly consolidation, which would just be all too natural for the price. Maybe down back into here where we have some form of support. It's not the biggest one, but it's the closest one that we have, right? If not for that, there's nothing here. 12 EMA is all the way down there too. And on the monthly, we're very extended. Google, I'll be interested maybe to revisit if we do get a consolidation phase, and I'll be kind of watching it. If it does pull back down here under 300, 290 to 270, I'll be exploring how the price goes into there. As of right now, no trades for me on Google, not up here, right? Bit too greedy for my liking, and also not really adding any to my long-term position either. I did most of my adding. The last time I added Google shares was like 225, 230 on this breakout area right here when the valuation still made decent sense, but now it's kind of, it's not super high, right? But I just bought all the Google I wanted to buy here, and then the last time I bought was into the 235, and now I will not add unless we get a nice technical pullback. Moving on to Meta right now. Meta up 3.43% because of this, right? The metaverse cuts. Now they're cutting 30% from the metaverse unit overall. I'll remind you that unit hemorrhages $4 to $4.5 billion per quarter. And what do they have to show for it? A measly $400 million in revenue per quarter. It's like 10 to 1 loss, right? So that has been kind of weighing on Meta's profitability for the last 4 years. Meta changed their entire company name for this metaverse. Maybe now they should change their name again to AIverse or something, because Mark Zuckerberg understands people's concerns recently about the CapEx raises, the expense raises. People aren't really sure if Meta is going to be able to utilize all of the data center capacity that it's building out because they don't offer cloud services yet. Microsoft offers cloud services, Amazon offers cloud services, Google offers cloud services, and so does Oracle, right? It makes sense that those companies are building out a lot of infrastructure, some to train AI models and to host clouds, but so far Meta is only using them to train AI clouds and improve its advertising algorithms. You probably don't need that much compute power if you're Meta, right? So possibly in the future, if they cannot use all that capacity, maybe we could also see Meta offer cloud offerings of their own. Remains to be seen, but Mark Zuckerberg understands that this is a concern for investors right now. So as a result, if he's putting more money into AI and data centers, well, he's pulling a little bit back from the metaverse spend, right? Which arguably they're also using the data centers for, but you know what I mean, right? One is for AI and cloud services. The other one is to work on their efforts on the metaverse. So nice piece of news from Meta. That being said, nice push by the bulls right now. So right now, if you do pull back a little bit further, looking for a higher low at this stage, anything above 636, looking for the daily higher low, right? Became almost into resistance, 680 up to about 706. It was a pretty decent area, right, of price action. Not a crazy one, as crazy as like this down here, huge, or this down here, right? But it's an interim level. That being said, the weekly, nice size bounce so far. Still a weekly downtrend, right? And the size of the bounce so far, if that was indeed the top of this weekly move, 50% bounce. So it gives the bulls a 50% chance of trying to reverse the weekly if ever the next leg is a bit of downside, before making this attempt at the resistance range again. That's if they don't just try to smash through it in one clean shot, right? If you do pull back, the goal that I'm telling you guys is, have we created enough space off the lows to make that a decent possibility? Yes. If you curl back down to the lows, I'll be picking up more shares of Meta. You guys know I've been buying shares of Meta this entire time as the valuation was supportive of some longer term portfolio buys around 630, low 20 forward multiple, and a 1.63 peg. So not too bad. And I additionally, if it comes down there again, with the big portfolio, selling some put options down here, sub 600, I don't mind doing that either. Moving on to Microsoft right now. Microsoft, recovering a little bit from yesterday, a little bit, but still struggling with this 200-day EMA, man. Still struggling a little bit, right? That being said, the context is key right here. Daily downtrend, nice size bounce into resistance, 500 down to about 490. Size of the bounce was okay. It was a 50 to 618% bounce. So the bulls have a shot, right, at going for the daily uptrend shift right now. We'll see if they can actually get it done. Unfortunately, if you unwind, I'll tell you guys where we're going right down here into 450, down to about 425. Big previous resistance range for Microsoft bulls all of 2024. So a retest of that location would not be so foreign if that is what the market has planned for us, right? That being said, beautiful area of consolidation. I'll be playing this pocket 470 roughly down to about 450. I mean, I'm adding a little bit of shares here when I can DCA for sure. This area down to the 450 pocket is where I want to be buying some Microsoft shares. The valuation now is almost under, well, at 470 it's under, but it's around a 30 and a 1.66 peg. Decent valuation for Microsoft. Been waiting for this for a long time, just looking for the good old monthly higher lows before further trend expansion. On to Netflix right now. Netflix, sadly, still down today, 0.71%, eclipsing yesterday's lows by a fraction. Of course, that has to do with their bids for Warner Brothers Discovery, and then a few government agencies saying, well, maybe that's going to break some antitrust laws, so we're not sure if that's going to go through. Well, which one is it, right? Are they going to bring the stock down because they're going to win the bid and they're pricing that in right away? Or are they not going to win the bid because of antitrust laws, at which point the stock should be going up, right? A lot of push and pull with Netflix right now, that's for sure. But pure price action, let's be honest, is still a daily downtrend, not daily oversold, and the bears are in short-term control. So the bulls have to do everything from scratch, just like all the other charts we just covered, right? Give me a nice bounce, go for the daily uptrend shift, and then we'll tackle resistance again, as they tried right here. 116 down to about 110 is that resistance range. Pretty big area of price action, right? Was support for a while, and then was resistance for a while, and all the EMAs are up there as well. So the bulls have their work cut out for it, right? We're not expecting this. It's going to be a slow and methodical recapture. If anything, at this point in time, it is still a weekly downtrend and still a big phase of monthly consolidation, the bottom end of which could bring us down into 100 down to about 90, which is like the 26 EMA. And also that is the most relevant area of price action that we have. So keep that in mind for Netflix. I am buying Netflix shares here all the way down through $90 as I do now enjoy the valuation after not buying here, nor here, nor here. Now it's finally down to my price, so now I'm buying for the long-term shares. Moving on to NVIDIA right now. NVIDIA up 2.11%, but still no daily uptrend, man. You gotta kind of get us above Monday's highs of 185, right? So they've been getting stopped out here. Resistance, support, support, resistance again. Hot area of price action, this whole 185 down to 178 range. But NVIDIA, I mean, they're trying, right? They're trying to kind of curl us over. You can see here the MACD also trying to curl us over after literally a month of negative momentum. The bulls are trying to get something going. You see it on the RSI as well. You see it on the MACD, right? So one more little candle push, and you might just have your daily uptrend breakout by NVIDIA. And you might also have the bulls attempt at recapturing a bit of a weekly uptrend that was lost, right? Loss of it. Now, I mean, it's NVIDIA. It can always V-shape, right? But maybe they have to go through a two-stage process as well. So NVIDIA here, I've been saying it for the past few weeks, it is a share pickup opportunity for me, or leap contracts if it's something that you want. I've been building a few key leap positions in here as well. That being said, leaps are not for everybody. So obviously do your own research and manage your risk accordingly at 180. But fair, in my opinion, fair multiples right now, mid-20s and a 1.15 peg. So NVIDIA not looking too bad. This was just and is still monthly consolidation. So I'll be buying here through 165 if we do get there. This is my kind of pocket range that I want to play. We've been very clear about that on the channel, right? 170 down to 155. Nice little pocket there to play within. Moving on to Tesla right now. Tesla looking very strong, man. 1.75% again. We were talking about this breakout as it was happening, right? Beautiful breakout by the bulls. We're coming into some resistance zones up here. Call it 460 up to about 475. You break beyond that, right? And you're going all the way up to 500 psychological, guys. So very nice move by Tesla. Short-term bulls are in full control. Big momentum shift right now on Tesla. You can see it on the MACD. Very big momentum shift by the bulls. If you get tired here because of this resistance, yeah, and you got to do it in 2 shots, you guys know what we're going for. The breakout, the retest of the range, right? 430 down to about 415. Looking for this. Possibly for more expansion. The weekly is looking really good right now as a weekly downtrend. Very nice retracement size move by the bulls right here. And on the monthly, this was always searching for a monthly higher low, right? Monthly uptrend, pulled back, made it into our bigger area of support right here, 405 down to 381. Resistance, resistance, support. Not quite to the 12 EMA, but very close. And now you might just be looking for a big leg of expansion by Tesla if the markets are supportive of that. Of course, if the SPY and QQQ pull back another 5%, well, Tesla's not going to make it happen, right? But if the markets are supportive in terms of bullish leading bias and the SPY, the Qs, and most of your market heads higher, you could expect Tesla to kind of start continuing, not start, but continuing to outperform here and go for the good old 500 breakout. We'll see what happens. Moving on to Palantir right now. Palantir challenging this resistance range. One candle, one day at a time. 185 down to about 170 is the big resistance range. It was big price action, right? Really big price action for a while on Palantir. And now they're moving into it. Daily downtrend was clear. Nice push by the bulls right now. You do have a nice daily uptrend going as well. So any move lower, looking for a higher low. Anything above 163, looking for the new higher low to keep going. On the weekly, we know we lost the weekly uptrend here. And now we got to get it back, right? So it's all in the size of the bounce. Size of the bounce so far, 50%. So if you lose this uptrend because you're in a resistance, right? Like Microsoft did, right? And you go down a little bit. Do we have enough space to set up for this maybe? A 2-step trend change process? The answer indeed is yes. Palantir also came very close to its 12 EMA. 150 to 140 was the support range. We perfectly came down into it, okay? And now the Palantir bulls looking to make some further work. If you consolidate further in December, it's still not looking too bad. That's still just monthly consolidation. 150 to 140 would be an area where I'd be looking to sell some put options. If you see a big red day or 2 big red days on Palantir with some increase in volatility, you can get that distance selling put options down here. Just some food for thought. Moving on to SOFI right now. SOFI up 1.82% during regular market hours. But sadly, in the extended hours, well, they got their dilution going right there, right? So down about 6.5%. Very unfortunate, but now with the price down here, well, now we're kind of out of the resistance range, and the bulls will be looking to establish some form of a daily higher low to push a bit higher. You might remember they did this back in July. So here is the moral of the story right here. SOFI announced a public offering of $1.5 billion in common stock. Additionally, there is a reserve amount for an additional 15% above the offering, right? So a total potential offering of $1.73 billion with the 15% in over allotment. Now, you might remember, guys, they did this once again back in July, right? July 2025, the company announced a similar $1.5 billion offering that caused comparable short-term selling pressure. Usually when you do a offering like this, the stock price will drop by the amount of the offering, right? That being said, it says here that caused comparable short-term selling pressure and shared dilution concerns. However, the stock recovered and ultimately posted strong returns, with the company then raising its full-year guidance. I largely expect this to be the same thing for SOFI, guys. Short-term dip buying opportunity, in my humble opinion. The price should be right into the 27 zone, perhaps tomorrow at the open. They're already there right now. We were saying in the past few videos that if we did get rejected for resistance, for any reason, whether it's the index pullback or company-specific news, anything's possible, right? Well, it's going to represent a nice buying opportunity. The bulls, a lot of space off the lows here. Anything above 2350, looking for a new higher low for possible a second attempt at this resistance range. And the weeklies, the weeklies have been choppy, right? But this is just one big massive area of accumulation in my humble opinion. And I will treat it as such and also be possibly accumulating. SOFI down here, 27 down to 22. I like playing in the lower range here with a couple different things. Yes, adding some shares to the long-term portfolio as the fundamentals do support some share buys here, especially if you're of the opinion that SOFI in the next 2-3 years can be a $50, $55, $60 billion company as they expand their banking, trading, credit, loan offerings, all things at the same time. Anthony Noto doing a great job with this company. But also my favorite type of trade is writing put options down here, 25. And SOFI is a company with really good volatility. So we can easily find some sell put options down here, the ability to write some put options, 25 down to 22. And what's the worst thing that happens? It comes into you and you just buy the stock where you actually wanted it. If not, you just get to collect the premiums, right? That being said, that would be an all too casual further monthly consolidation test as they did during November. Previous resistance, current support, 12 EMA. It would be beautiful. If they offer down there, I definitely will be taking. I'm not saying it's going to go down there, but that's why, right? Nibbling a bit of shares here where it is right now at 27 and firing off some short put orders down here. Not a bad proposition if you're a SOFI or believer in the company, right? Moving on to Uber right now. Uber up 0.34%, pretty much an inside bar with yesterday's trading candle. Daily uptrend is key right now. In motion, 92 down about 87 is the resistance range. It was support for so long, resistance, and then support for so long. We'll see if they can make it cleanly through this area and get back into the gulag of the chop zone, right? If they get rejected here, higher lows are down here, 85.53. Any move lower from here, probably I will be looking again for some short put contracts down here, selling some put options, right? Collecting some premium down there, not too bad. Weekly is a downtrend, but the size of the bounce so far is quite good, right? 50% bounce. So if you do lose this daily momentum, right, overall and head for a bit of a weekly higher low, I will be looking down there for some possible further shares because Uber is at a very attractive valuation in the low 80s, 1.5 PEG, low 20s forward multiple, and a 5% free cash flow yield. That is the last area where I was able to pick up some long-term shares for my long-term portfolio, but also sell some very attractive put options down there to collect some juicy premium. And last but not least, Taiwan Semiconductor Corporation. Moving on further, right? So Taiwan Semiconductor, bit of an inside bar today and yesterday and the day before and not the day before that, but you can clearly see, right? Doing a whole lot of nothing, but sometimes nothing is good because the bulls are just holding firm here above the EMAs. Nice engulfing move. They're looking for the daily uptrend, kind of like NVIDIA, right? We will see if they get it. If they do, resistance obviously at the all-time highs. Call it 307 up to like 310, that little range up there. And in the event we unwind, we got support below us right here, 280 down to about 270. Decent. The bulls are trying to go for the trend change, right? Weekly, they lost it. Weekly downtrend. Now they got to get it back in 1 or 2 steps where they do it up here or they do it down here. Nice bounce overall. No swing trades on TSM for me. They just didn't pull back far enough towards the 12 EMA for me to get some short put trades in there or for me to buy a bit more shares or go for some call options. So I'm focusing on other names that have completed a more full retracement size. But TSM, guys, I'm not selling any long-term shares up here, right? I'm not really buying any long-term shares up here, but I'm also not selling. I think the valuation is still very fair. The company, beat and raised its guidance on earnings. Recently, about a week and a half ago, 2 weeks, they raised prices, or they said they'd be raising prices for the next 4 years. So pricing power is not an issue, right? Huge backlog of orders all the way through 2026. They just can't produce those chips fast enough. And the valuation is not that bad. But TSM for me up here is just a bit of a hold. It's not a buy, it's not a sell. For me, it's just a hold. But if I didn't have a big position and I want to hold this company over the next 5-10 years because I was building, it's not bad to be DCing up here, right? It's not optimal, but it's not bad. I mean, look at this EPS growth and look at the revenue growth as well, right? They'll be having a very nice next 3-4 years overall. And that's everything for our overall market rundown. Hopefully you guys enjoyed that. Now we're going to talk a lot about the biggest gainers and losers and focus on the biggest gainers because in terms of the losers, there's not much to talk about down here, honestly. If anything, we've brought up these companies in the past few days through earnings or otherwise, right? No, what we will be focusing on is everything that you guys want to focus on, right? The high-flying, high-beta names that came down an absolute metric ton from the highs of October to where we are now, and now they're coming alive. Names like, well, UiPath was an earnings play. Names like ASTS, names like Oklo coming live, names like EUSC starting to engulf daily uptrend, names like Rocket Lab, daily uptrend starting to engulf, right? First batch of daily uptrends on so many of these names since the sell-off. It's been almost 2 months, guys, almost, right? Even SMR trying to change, and they haven't had these uptrends in a very long time. A lot of them look exactly the same. So how do we possibly play them now that we've recognized that we have a momentum shift, a MACD shift, a daily uptrend shift? All these look the same. I promise you, for the most part, even some of the quantum computing names, the MACD shift the daily uptrend shifts, right? There's a lot of commonality amongst these charts. So how do we play them? Let's get into it. Okay, so number one, we're going to talk about good old UiPath, the newest addition to a lot of my portfolios as well. Pretty decently heavy in this one with the Discord guys as well. But I will take you guys through their earnings in the Saturday video and show you why this one was so substantial. Their first gap profitable quarter, which is very good for the business overall. We've been waiting for this flip for a very long time, but a lot of these charts, guys, look the same, right? There tends to be a long accumulation period, and this is the same, whether the chart is up here or whatnot. Long accumulation periods with monthly breakout retests like this, right? Very solid. We see that in many different companies that I tell you guys about all the time, right? You see it in Grab sometimes. We have these beautiful breakout retest periods in time where it can be very interesting for an increase in price. Now, UiPath is a company that's very misunderstood by a lot of people in the analyst community, but has been building a lot of momentum in terms of retail sentiment recently, at least, right? Now, this one, you can compare it to Palantir in certain aspects, and the aspects that they both seek to optimize certain different processes within the corporation, within various corporations across various different industries, yeah? If you think of Palantir, you think of Palantir being able to manage big data and provide complex solutions and overall being able to interpret the data and send the company on the right path, right? In terms of different optimization processes that they could use that data for. UiPath is somewhat different. This is a company in terms of it's RPA, right? So basically robotic process automation software. And previously there was a use case for this product back then, but it's kind of like Palantir, right? To where the product needs the right backdrop to really start getting some lift and starting getting some client base. You guys remember Palantir for a long time only had a lot of military contracts. And only when AI really started popping off about a year and a half ago, Palantir started getting more and more and more commercial and corporate clients, which was the second growth driver for the company. UiPath is the same. They've always had their same Maestro software and other little tools here and there, right? But for the most part, the product was underutilized 2021, 2022, because corporations didn't really see the benefit. But now with AI efficiency front and center for all corporations, they're getting more and more clients. They're getting better at what they do. The profitability metrics are also improving. Revenue projections are also improving massively. So it's kind of like the perfect storm of things all coming together for the company to where now, because of the current environment, this product has a perfect fit that's going on for it right now. Essentially what they do is very simple, right? Think of all the routine tasks. Palantir, when they do data crunching, they don't cover how to optimize very routine tasks, right? They provide complex solutions and more of a deep thought process as to data interpretation. Path is kind of like Palantir's little brother. They do a lot of things that Palantir doesn't, just in terms of very routine and mundane task optimizations within the different corporate stack within a company, right? So I'll explain more when we cover their earnings, but I wanted to explain the context of why this one's rallying so much. Yes, there's an earnings to it. Yes, there's retail momentum to it, but this is also very suited to the current market environment. And I do believe it's the start of something possibly very, very good, which is why I'm positioned for the long term with price targets far above. Is it too late to enter this one with a long-term thesis? No. With short-term call options, you're going to kill yourself with the IV right now for sure, unless the momentum keeps going like this super hard, right? But I have leaps and I have long-term shares, which I'm holding well through 2026, well through 2027. So keep that in mind. I'll present more to you, but this is not the focus of today, but I just wanted to cover it very briefly in case you were wondering what went on there. The focus of today is going to be all of these other companies, right? ASTS, you'll notice some common themes. I'm not going to go through them each and every one. You guys know which companies you prefer playing, right? You may not want to do ASTS. You may not want to do Oklo. Maybe you are a bigger fan of EOSC. Maybe you are a bigger fan of something like a Rocket Lab, right? Maybe you're a bigger fan of something like a SoundHound. They all have a very similar setup. So I will not pick and choose which ones are best. I'll just tell you what is the current trading setup for a lot of these different companies. CoreWeave is arguably the same setup as well, right? There's so many different setups. HIMS is arguably the same type of setup as well. And I will show you exactly what I mean. It all starts with what I've been talking about for the longest time now, for about a month and a half on the channel, is wait. When you're in the context of monthly huge uptrends, you wait for pullbacks, try to find confluence. Confluence is very important when you're trading. Support areas, possibly very close to the 12 EMA, possibly culmination of daily oversold conditions, and a culmination of the MACD cross. Notice how many things I line up at the same time there. When you line up so many various things and you then wait for something that has not happened in the last 2 months, which is a daily uptrend breakout, well, then you get a tradable bottom. You get the daily uptrend break, you get the tradable bottom, and then you're looking for the continuation, or rather the recapture of weekly and monthly trend expansion, right? So that being said, whether it's on ASTS, I'll show you one. This one is arguably a little bit late because you're already within your target. I'm talking for those of you that are trading out here. We're just refining our entries and exits. If you're entering long here, where's your target? It's all the way up there. Where's your stop loss? All the way down there. This is not a great risk to reward ratio. The one that I took yesterday with our Discord group was Rocket Lab. Rocket Lab put in the daily higher lows here, the daily uptrend break here. My entry was on the break of the daily uptrend out of support into a monthly 12 EMA in the context of a nice monthly uptrend, okay, into out of daily oversold conditions, excuse me, and the MACD cross. Everything together, you get in here, stop goes below there, and then you target. Well, my personal targets for these, especially with very deep cuts on the weekly like this, are in terms of the fibs, right? In terms of the size of the decline, usually I'm looking for about 50 to a 618 retracement size because I understand that this is a big ask for the bulls to just V-shape this in one clean shot. Maybe it's something more like this. Yeah. So those are my personal price targets and the way that I go for them, which is why I'm looking for some that when they give me the daily uptrend break, I mean, I catch them early enough to where it's not just like this and then I see it here and then we're like, well, we're out of risk reward territory, right? So whether it's this one, whether it's names like SMR, I'm not telling you which ones to trade. I tend to trade companies with actual revenues because they're easier to get behind. Shout out to SMR and Oklo, but Oklo have the exact same patterns, right? This one has not been daily oversold conditions, so this is a -1 for me. I'm looking for stocks here with the maximum amount of elements of confluence. Oklo didn't get the 12 EMA touch. They got a bit of a pullback into a previous support range right there. It's not a very strong one, but it was there, right? The top of those candles from back there, it was definitely back there, right? And you also have the daily MACD cross as well, the daily uptrend. So the entry goes on the break, stop goes below the low, and then depending on your price targets, the way you trade, whether you want to take this full move or the half move into a 5618 retracement type of thing, right? The risk reward makes a little bit more sense. Now, that's for people trading. So you'll see a lot of these look exactly the same, guys. A lot of these, I didn't really do it on Resolve just yet, but look at that. There's some really nice bullish divergence right there too at the same time, but that's not the prettiest setup because you don't have the daily uptrend break like you would on a Rocket Lab. So I went through a lot of these charts and I said, which one looks the best with the most factors of confluence right now? But they are all curling, right? We can clearly see something is happening here. You're curling on the MACDs after so much negative. You are now curling on the MACDs, even HIMS going for the daily uptrend break. Now, unfortunately for HIMS, they have resistance in the way, right? But could this be a start of a recapture of some momentum here on some of these names? The answer, quite frankly, is yes. So if today you were only looking at the indexes, you kind of missed what's going on here under the hood for a lot of these companies. And even names like quantum names are displaying the exact same thing. See here, there's no support, right? That's why I went with Rocket Lab. Rocket Lab had a bit of everything. Here, there's no support. Here's just literally a monthly pullback to the 12 EMA. Barely. I mean, maybe you can argue that there's something from back there, but it's not like Rocket Lab. Rocket Lab is clean, very clean, right? So I go for the ones that look the most clean. I look for the A+++ setups. Those are usually when you have the best success rates. That being said, they all look the same. Daily uptrend break, MACD cross, as we can see, right? No oversold condition, so that was like a -1 for them. But even Rigetti, I'm not saying buy Rigetti. I'm just saying when you look for these patterns after it's been consolidation, right? Weekly consolidation for a long time, monthly consolidation for a long time, and you're looking for the next spark that could possibly give you a tradable bottom entry with a stop loss down below here, because you're never sure, right? They could just look to set the weekly lower highs and just unravel even more. You're never sure, right? So that's why if you're trading with a stop loss. But I was saying, and I think it was Monday's video, right? If you're looking for these companies while they're in their bottoming out process, oversold conditions, into support, in the monthly pullbacks, well, you should be looking at ones that you want to hold. So we covered the portion for the traders so far, whether it's EOSE, like they almost all look the same, right? Okay, this one, you got the MACD cross, no oversold. I mean, we did come down into a bit of an area, right? They flushed it a little bit, but you guys get the drill. Some are prettier than others, right? It is the same pattern, daily uptrend break after weeks of consolidation. This one, FLNC, looks phenomenal, even though they did it a little bit sooner. FLNC looks phenomenal. This is also one that I'm exploring for the near-term future. But a lot of these companies, guys, look almost identical, right? Some of the neo clouds are kind of awkward. They don't have the cleanest setups, like CIFR right here. It's just not super clean. NVIS, right, is not super clean, right? They're trying something, but it's just not as clean as the other setups. Not just that one and done. This is a two-step drop right there to the, not quite the 12 EMA, but very close. Iris Energy as well. Anyways, I'm kind of jumping all over the place, but I'm trying to show you guys some setups are cleaner than others. See, Iris Energy hasn't done it just yet. They don't have the daily uptrend. There's no confirmation there. But a lot of these companies do look the same. And when I find certain similarities between, well, they're all in different sectors, let's be honest, right? But they're all the momentum and the high beta trade. And that's how I identify potentially local lows before a next leg higher if we're looking to position for some shorter term swing trades, rather than saying into this one, is this the bottom? Is this the bottom? Is this the bottom? Is this the bottom? What I always tell you guys, right? Wait for the bulls to show you where the bottom actually is. Wait for a confluence of factors. The more factors of confluence that you can line up on a single company, the higher the probabilities of success rates for your trades being able to follow through in a profitable situation, right? So if you are an investor though, right? Investor is different. We talked about this, right? Because the market has not been easy on these names, it was a nice time to research which of these companies, now that a lot of them were down, good 30, 40, 50% from their highs, into areas, daily oversold, monthly EMAs, support areas, which of these companies do you want to build positions in for the next 2, 3, 4 years for the expansion of their fundamental thesis? Because let's be honest, a lot of these companies either have small revenues for the next 2 years and then have a big ramp into 2027, 2028. Some of them have no revenues at all, like SMR, like Oklo, et cetera, et cetera, et cetera. Other ones like the neo cloud providers, like the CoreWeaves and the MBISs and the Iris Energies of the world, they'll have to spend a lot of debt in the next few years, a lot of CapEx, building out the data center offerings. You know what I mean? So it will take some time. So that's what I was saying. You have time to evaluate these companies now that they're down. Iris Energy is down from the highs, still down like 37%. NBIS was and is still down from the highs. What is that? Like a full 25, 26%? Earlier, it was down 37%, right? But we're still within the same area of overall consolidation. So now is still the time. We're not late. But it's just, if you're a long-term investor, you don't really care about picking the bottoms or having stop losses. No, you would just look for an overall area in which you think, you know what? I have a favorable outlook on this company. I think they'll be worth 2, 3 times what they're worth today. As a result, I want to be shopping in an overall area for these companies because I'm not trying to predict short-term price action. I'm just trying to build and accumulate a position like an institution does, right? So that was your time to research a lot of these companies. I let you know some of the companies that I am taking into the next few years, right? Been very clear with that on the channel the past few weeks. I showed you guys 20 companies, 14 of which were core positions. And I did give you guys 5 or 6 of these different growth names that I was choosing. Not all of them. I always got some tricks up my sleeve, a lot of which are for the Discord members, of course, but I give you guys most of everything, right? So that being said, notice the momentum shift. And for the other companies that are still around these lows, if you're a long-term investor, don't have any anchoring bias. Don't think like, oh, I could have bought NBAS down here at $80, so I don't want to buy here at 100. If your thesis is that this company is going to be worth 3 times what it's worth in the next 3, 4 years as they go through the multiple stages of their build out, do you really care if you bought it at 88 or 100 if you're looking for a 3x? Probably not, right? It's like, do you think the people down here care if they bought it at 33 versus 37 or 39 or 40? Probably not, right? So if you're a long-term investor, you should be focusing on building a position within a common area as opposed to trying to take a one-shot time the absolute perfect bottom and then just cross your fingers that you did clip the bottom and then it's never going to see that price ever again, right? It's a lot psychologically easier and it's a lot easier on your wallet to accumulate within a desired target range on some of these companies if they have seen some significant pullbacks. So looking good, right? Once again, I'll reiterate some plays that I am currently in and or looking at. Path is very decent. Another one that I'm exploring a lot is FLNC for battery storage in Europe. kind of a nice tandem play with NBIS. They're still relatively cheap, but once again, this is another company where the forward revenues are deep into the future. So as a result, right, the profitability is deep into the future. The revenues are buried deep into the future as well. They're expanding well now though, but they have to expand, right? And the price is going to be very, very volatile across all this stuff. You guys know that I was saying that HIMS was a decent opportunity down here. HIMS, in my opinion, is still a decent opportunity. You may hate this company, and that's fine, but for people that actually want to play it, around 35, price of sales made a lot of sense. And even here at 40, it makes sense, but it's the area, right? We want to be building in an area, accumulate like an institution, guys, right? That being said, you know, you can make certain arguments for other companies like APLD, CIFR. I'm not here to tell you guys which one is the best. I'm here to tell you guys, just look at the entire industry. And if you need AI to help you out, just ask Grok or Gemini. Hey, can you compare me APLD, CIFR, NBIS, Iris Energy, CoreWeave? Tell me the pros, tell me the cons, give me some price targets, and then you do your own research and derive which 2 or 3 out of 5, 6 companies do you maybe want to take your chance on for the ramp of the entire industry, right? And that's kind of what I wanted to say about the whole thing. You guys know we covered their earnings. You guys know that NBIS for me is call debit spread leaps right now. You guys know that NBIS for me is share accumulation, and Iris Energy also is share accumulation, and that I have a few small leap call debit spreads on CoreWeave as well. So those are my like big 3 picks. I've given you guys other things to kind of look into so far as well. Shout out to other companies like Ondas as well. Ondas is getting a lot of my attention recently too for a possible position into the future. So is a name that I've never mentioned on the channel, a name like Kraken Robotics, which has a direct partnership with Anduril. So I'll share that one to you guys. Names that we've been making a lot of money on the Discord, but I've never shown you guys. Name like TE Energy. Yes, we've been in for a while and we're up a lot of money for sure, right? So there's a lot of different plays. If you do your own research, I try to provide and present to you guys as many as possible on the channel. And I'll be doing that again in the future. Shout out to the energy plays as well, like Vistra, which are currently down. You know, nice little monthly backtest here into support. Great valuation. Exposed to all the data centers into the near-term future as well. Shout out to names like Next Era Energy, which are arguably the same thing, looking for some expansion after doing consolidation phase for the last 2, 3, 4 years. So there's a lot of opportunities, depending if you're looking into energy, into the actual data centers, into connectivity of the data centers, such as names like, oh, you guys disappeared on me again, such as names like ANET, right? Such as other names as well. You know, we can spend all day on this type of stuff, right? So yes, I know. A lot of different plays out there are possibly ripe for the taking in terms of the hype and momentum plays, or the narrative plays as we like to call them. But also don't forget about all the fantastic high quality companies that we talked about earlier on this video, either, you know, amongst the big tech names that I'm currently bidding on as well, amongst names like Visa, like MasterCard, like Mercado Libre, you know, other names like, you know, kind of blanking right now because we went through so many names like, you know, SPGI, names like Moody's Corporation, just high quality businesses, super high quality businesses that haven't done anything. So there is something for every type of person in the market today. If you are a big, you know, a value investor and you only prefer companies with wide moats and large competitive advantages and large caps, there's something for you. If you are the type of person that is looking for aggressive growth at all costs and you have very high risk tolerance, there's something for you. If you are just trading the markets and looking for very attractive setups, well, I just showed you some attractive setups. That being said, that is everything that I had to show for you guys in today's video. So hopefully you guys enjoyed today's video. And as per usual, if you did, consider dropping a like. I would really appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. Very close to, I was about to say 110,000 subscribers. It's actually 11,000, but I don't know. The number just appeared in my head and it looks really nice. So I guess I said it. Call it a Freudian slip. So almost 11,000 subscribers, and I need your help to get up to that 11K. I will eventually try to get the YouTube plat, guys, for 100K, but we're well away from there. Let's take it one video at a time, kind of like we trade the markets, right? One day at a time, one video at a time, you know. But thank you guys so much for all the love and all the support so far. You guys make it very much worth my while to make these videos. It's always fun making them, and I enjoy seeing you guys comment down below. If you have any comments, please feel free to leave them down below. If you have any trade ideas of your own, please feel free to leave them down below. We'd love to have a discussion as well. And that's pretty much it for today's video, guys. So take care. Wishing you all the best in tomorrow's session of trading. And I will see you guys on Saturday. I'll be doing a Friday and weekly market recap video, Saturday late afternoon into the evening. And we'll also be doing a few recaps of some earnings that we missed this week, such as UiPath and possibly others as well. So take care. That's it for me, guys. Love you as always. Have a good night. Peace.